Hello, chart watchers, and welcome to Market Watchers Live with Aaron Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived until the next show begins, so you'll generally have a couple of days to go back and review it. During today's show, please feel free to submit your ticker symbol request, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. Also, lower right-hand part of your screen, you'll see How Do We Do? As you leave today, we'd love for you to fill out that little survey. It's a brief question where you can provide us some feedback, what you thought of the show. For those of you joining us for the first time today, welcome to the show. We're certainly glad you decided to join us. And for our regulars, welcome back. Well, we have got a packed house in here today. I've got my co-host Aaron Swinlin, which I will be bringing in just a minute. We also have Chip Anderson, El Presidente at StockCharts.com, and Bruce Fraser, who will be in talking about the Wyckoff approach in just a few minutes. But first, I'll bring my co-host in. How are you doing today, Aaron?
I'm doing great. How are you? We're getting nice and cool weather here. It's so nice. It's been overcast for like 3 days. I'm just loving it.
Yeah, I know. It's been a little bit of a break out on the West Coast, which is awesome. Also, you got this crazy thing called Game 7 on the West Coast tonight.
Yeah.
It has been a wild World Series, but we got Game 7 coming up later, so that'll be interesting for those of you who like to follow baseball. Mm-hmm. But I know we got a lot going on today, so I don't want to spend too much time going through baseball. Instead, let's bring in Chip Anderson and Bruce Fraser. Welcome, gentlemen.
Good morning.
Yeah, good morning. Thank you.
Awesome. Well, I know, we got a bunch to get into, and I know Chip's got a couple big announcements that he wants to get into, and then we'll have Bruce come in right after that. But why don't we go ahead and get started, Aaron? You can go through the agenda and give us our first market update.
Sure. I did want to make sure everybody knew about your wonderful Friday workshop coming up on reversing candlesticks.
Yes, thank you.
Yes, everybody wants to see that. So what do we got for the agenda today? Market updates on the half hour. We're going to have those big StockCharts.com announcements shortly. Don't go. Really brief talking technically. We're going to look at some economic reports, etc. Professor Bruce Fraser, as Tom said, from Golden Gate University is here today. We're really excited to talk to him about Wyckoff and how to use it with trading. 10 and 10 to 1. I'm taking your symbol requests right now in the chat box and, of course, on Twitter. So feel free to give those to us. Our first one, the teaser, is BOTZ, B-O-T-Z. That is going to be the first one we're going to go over. So if you wanted to go take a look at that chart and take notes and then see how you compare to Tom's notes. And then finally, we've got momentum sleepers. We've got a few good charts to show you there. And then we'll finish up with mailbag wrap up and questions that you might have. And with that, I think it is time for our first market update. Let's head over there. All right. Interesting day in the market. We're going to look at our predefined headline alerts first. And as you can see, actually, there's quite a few for November 1st. We're seeing all-time highs, of course, on the S&P 500, on the TSX. We have a little bit of split personality going on here with the Russell 2000. Earlier today, it did make it above 1,500, but it has crossed below. I'm going to show you the market summary, and you're going to see where our small caps are lining up. Dow is setting a new all-time high yet again, along with the NASDAQ and the S&P 500. Let's go look quickly at our market summary. And I will show you how, what I noticed right off are the small caps definitely suffering in comparison to the other indexes that we can see. They're sitting at the bottom with the S&P 600 and the Russell 2000, with the S&P 600 actually down over 0.75%. So what we're going to want to look for, if everybody else is making new highs and doing well, we really need to see small caps get on board in order to continue to fuel the rally. And that's all I have for our first market update. And I'm going to send it back to you, Tom.
All right. Well, I am not going to waste any more time because there are some big announcements, some big things taking place at Stock Charts. And we have the man to come in and present it himself. Chip, what you got for us?
Good morning, Tom. Thanks. It's good to be back and talking to everybody here on our internet web channel. And essentially what I wanted to talk about, a couple of things. I think hopefully everyone has seen the growth of Market Watchers Live over the past couple of months as we continue to expand the format. We've moved over to the live stream platform. Everyone now has the digital DVR to scrub backwards and forwards and do all those other kinds of fun things. And then Tom and Aaron just continue to step up their game. I think they're doing an excellent job. Viewership continues to grow. We're really happy with what's been going on. There have been changes behind the scenes as well. All of that moving towards what we're announcing today, which is that starting on Monday next week, Market Watchers Live will go to 5 days a week rather than just the Monday, Wednesday, Friday format. It'll be on Monday, Tuesday, Wednesday, Thursday, and Friday. I know Tom and Aaron, I haven't told you about this before, so this might be a shock to you.
Did you hear the thud as I fell off my chair?
No, I'm kidding. They've known about it for quite some time, and we've been preparing for it for quite some time. It's kind of always been the plan, and we think we're ready to take that next step, and we're really excited about that. Part of the reason we're going to be able to do that, again, is because we have more people behind the scenes that have been helping out with the process, as well as more equipment and more capability. And then in turn, this is actually just another small step in a larger direction that we're trying to take. Step one was to get Market Watchers Live going. Step two is now to move it to 5 days a week. Step three is to move it to 24/7 on all the time. Actually, not Market Watchers
not
Live
us.
today.
Yeah, am I going to be on here 24/7?
I can have some sleep now and then.
So Market Watchers Live will form the core of what we're calling Stock Charts TV. And so we're going to have a 24/7 streaming internet video feed. The feed that basically everyone's watching right now is just not going to end. It's just going to keep going. Now, a lot of it will be initially repetitive content, repeating content, pre-recorded content. But we plan on continuing to expand out the amount of live content on the show. We want to add more live shows than what we are doing right now. Again, we'll fill up the time. There'll be lots of pre-recorded educational content. We have a ton in our archives already. We'll be rerunning the show, so if you can't make the Market Watchers Live show at noon on the day, then we'll show the same show again later in the day. It'll give us time to do more interviews. Bringing other people on and having other people talk is something that we really want to get back into the habit of doing. And so by going 24/7, we'll have that capability. And then we'll just continue to up our game. I mean, I think you're going to see, hopefully you've seen an increase in the professionalism that's going on here with these shows. And we want to continue to improve that and make that even better. There's some other things I just quickly wanted to mention while I'm here. We, the people behind stockcharts.com, continue to work on the website. Hopefully you've noticed some improvements in the look and the design of the site over time. The other thing you probably haven't noticed is what I've been spending a lot of my time on is working on moving the infrastructure for stockcharts.com up into the cloud. And that's a full-time project. It's a large project, but it's a necessary project. We can't continue to grow using the technology that we're currently using, and we need to migrate into the cloud. That's going to give us increased stability, increased reliability, and ultimately increased capability, as we're going to be able to do more with all of those resources that the cloud provides. I will warn you now, while we work really, really hard to prevent this, there could be some bumps. It's never easy moving your infrastructure and completely changing everything underneath the covers. We're trying very hard not to minimize those bumps, but I'll warn you now, there might be a couple. I'll also mention that we've been doing new stuff. Even though we've been doing this big rewrite under the covers, we've also been releasing new stuff. Hopefully everyone has had a chance to check out our new price alerts, the new blogs we've been adding from Tushar Chande and others, and as I mentioned, the new site design. Finally, I do want to take a half a second and mention what's coming up in the near future. It is becoming the holiday season. Hopefully everyone had a happy Halloween. That means we're on the downslope towards the holiday season at the end of the year, including Cyber Monday. And longtime subscribers to Stock Charts know that Stock Charts always does something a little goofy on Cyber Monday in terms of specials and pricing. We also continue the festive holiday spirit throughout December with specials and pricing. So keep your ears open for that. If you're not a subscriber to our newsletter, you absolutely want to be. That's where we'll announce new stuff coming up in terms of specials. Then we also are working hard now on ChartCon 2018. Maybe a show of hands, everyone who went to ChartCon 2016. Hopefully you had a good time. That was actually the first time we used this live stream technology, and it worked really well, and so well, in fact, we're going to be doing it again next year. The official plans will be announced later, probably in January, but we hope that ChartCon 2018 will be even bigger and even better than what happened last year. So keep that in mind. That's pretty much all I've got to say. Those are my big announcements. I want to second what Tom said in terms of the survey for this show. At the end of the show, there's a little box, and you can see that. Please fill out the survey. As we mentioned, this show is evolving, and we are very anxious to get your feedback on what you like, what you don't like, what we could improve, how we could change. And especially now that we're moving to longer formats with more, we'll be able to be more reactive to those comments. So please take a moment, fill out that survey when you get a chance, and we'd love to hear from you. With that, I'm going to send it back to Tom.
Yeah, I was going through the chat room, just following some of the comments that were coming through, and it seemed like just about it was unanimous. Everyone was pretty excited about going to 5 days. I know Aaron and I are excited as well. We both really enjoyed doing this. So I think that's great news. But a couple of questions that came in, Chip. One is, will the archive still be around for a couple of days? But with the move toward 24/7, I'm assuming that these shows are going to be broadcast other times during the day, rebroadcast. Is that correct?
That's absolutely correct. And also the DVR scrubbing capability, I think, will be available a little longer than it currently is. We're still evaluating the concept of archiving. One of the challenges with archiving is allowing people to find content that's like 3-4 months old. So we do have video archives from older shows, and we're going to be making those more available through the concept of Stock Charts TV. And we'll just have to see over time how it goes in terms of the archiving of the TV itself. I think by just showing the content several times a day, we might be able to accommodate most people.
And I think, too, there was a question about would be great if Market Watchers Live had a video library. I think one of the things that we're doing with these special segments, like this Friday's Candlestick segment, and I think also Erin, when she did her PMO segment, I had done a Trading Gap segment earlier. Some of these that withstand the test of time, that aren't necessarily in the moment kind of segments. My assumption is, and maybe I'm incorrect, but my assumption is that these are going to be made available throughout. These would be kind of pre-recorded shows that you mentioned before, that they will find their way into the 24/7 stream at some point.
Yes, absolutely. When we're not having a live show, such as this show going on the stream, on the TV channel, we will be showing again and again and again, in some cases, pre-recorded educational content, so that people can get a chance to review all that information. We plan on generating a lot of additional pre-recorded shows, just like you see with a television show. Myself or you or Aaron, somebody demonstrating a feature of the site. We have lots of that content already available, and we want to just make it available in a repeating way, much like a television channel.
Another question, Chip. I think there was a question out there as to whether or not all these changes that we're making, will they result in any change in the membership fee?
In the membership fee, there are no plans on changes in membership fee anytime soon, with the exception, if you heard me correctly, hint, hint, nudge, nudge, of Cyber Monday and the holiday season. decrease in pricing, if you know what I mean.
I think we know, but definitely you mentioned everyone out there should be a subscriber to the newsletter, and really should. I think Aaron and I really talk about this a lot, that if there's one thing you do when you first sign up at Stock Charts, or as soon as you come into Stock Charts, is go to the blogs page on the right-hand side. You'll see an area where you can sign up for the Chart Watchers newsletter. That's where a lot of great information is provided twice a month, first and third Saturdays of the month generally. And not only great information technically from a lot of the folks here at Stock Charts, but also information about the site, the Cyber Monday, all these different deals and so forth. So you really want to make sure that you are a subscriber to Chart Watchers.
Indeed.
I agree.
Okay. I was just waiting to see if everyone agreed with me. All right. Appreciate it. Anything else for us today, Chip?
No, we're doing good. Please fill out those surveys, and I will be back when I have other announcements. Talk to you later.
All right. Thanks. That's exciting news for everybody. Like Chip mentioned, we did know that this was kind of in the works, but we decided to go ahead and start it on Monday. So as we head into the very bullish months of November and December, we're going to be with you 5 days a week. I know, Aaron, I'm excited about it. I know you are as well.
Absolutely.
Yeah, so this is going to be pretty cool. And I think from the feedback we're getting in the chat room, I believe everybody's excited about this. So good news all around. Now, we do have a guest on the line here, Bruce Fraser. He is a professor at Golden Gate University. He studies the Wyckoff Method, has studied it for years and years. He teaches it, and he is here with us today, and he's going to be giving you all some really awesome information. Welcome to the show, Bruce.
Good to be here. Thank you.
Yeah, it's awesome to have you. You know, I'm not a huge follower of Wyckoff in that I don't necessarily go back and review it on a regular basis, but a lot of the principles I follow are very similar to Wyckoff. So I'm really looking forward to your presentation, and I don't want to cut into it. So I'm going to go ahead and let you take over and just start off, I guess, with giving everyone a little taste of Wyckoff and some of the basics that you follow.
Thank you. And by the way, what I just heard here was epic. That's just amazing. And I'm a huge fan. I'm on listening to Chart Watchers live all the time, Market Watchers live all the time. And
that's awesome.
And so I get more of that. So, and it's a little odd for me to be sitting here like I normally am with my cup of coffee, and instead of just listening, I'm talking to you.
Oh, well, we feel the same way. We're talking to you, which is pretty impressive.
Time for our coffee.
Oh, good. Yeah. Okay. Well, so I'm going to take the screen.
Yeah, and the screen, Aaron was showing the Wyckoff Power Charting blog. The author is Bruce Fraser. So if you want to learn more about Wyckoff, you definitely want to be checking out this blog on a regular basis. How often do you post in there, Bruce?
Once a week.
Once a week. Okay.
Yeah,
so you're constantly giving an update.
Typically at the end of the week. So, okay. And I have a few sort of legacy pieces that I'm going to try to point to as we go through, because there's a lot of material that is just sort of good background to have about Wyckoff. So we'll, and Chip and the Stock Charts people set up a really great archive, and you can see it there on the right. And that archive is by date. And so you can go back through and pick these up in any order that you want, but you can go chronologically. And especially in the early part of the, when I first started blogging, is I did a lot on the principles of the Wyckoff Method. So I would encourage people to go back and just sort of go through the first, say, 9 months and have a look and see if there's anything that interests them.
Yeah,
okay, cool. Here we go. I'm going to try to take the screen.
Okay.
There it is.
Oh, boy. And a point and figure chart. And
yeah, you've scared everybody away now.
No, yeah, it's like, okay, so let's see here. Of course, I'm not where I belong. So here we go. And Tom, in fact, your comment, the thing about Wyckoff is that I think we would all agree that there are best practices in market analysis, technical analysis. And I started my career 30 years ago last month teaching graduate school and teaching the survey course, where we covered all of the different technical analysis concepts in the class. And so I'm a huge fan of all technical analysis, but always with an orientation towards what are best practices. Mm-hmm. And I think what we'll discover with Wyckoff, even though it's 100 years old, is or older, is that the principles of Wyckoff are going to seem very familiar to many people. And so it's just that it's a methodology, and the methodology focuses almost exclusively on price and volume. So
you're speaking my language now.
Yeah, so it's great stuff. But I'm a complete fan of indicators and oscillators and those other things, and use some of them myself. And so, but for the purposes of Wyckoff, we're just going to talk about the basically the idea that you can discern the motives of the market from looking at the patterns of price and volume exclusively. So let's see if I can convince everybody of that here. So anyway, here, I'm going to go pretty quickly because this is all introductory, and I promise to come back and go through aspects of this in more detail at a later time. So this is really just sort of a brief introduction in the time that we have. And so let me do this. Hopefully that looks a little better. Mm-hmm. And so the idea is the price cycle. We're all familiar with the price cycle, and whether or not you're an intraday trader or you trade for the very long swings, we know the cyclicality is the nature of markets. And what Wyckoff would focus on is that they broke it up into 4 ideas: the accumulation area, the markup, the distribution area, and the markdown. The important question that he asked was, what is it that causes prices to move in this way? What is going on underneath the surface that we can't necessarily see that's important to driving prices up or down? And so the idea, the motive is to campaign the big uptrends until they're concluded. And then for some people that are into short selling, this is certainly a great method for identifying good short sales. But in my mind, it's always about the campaign. In the campaign, I love big bull campaigns.
One quick question.
Sure.
When you talk about short selling, was Wyckoff or would that method look to short in, say, an uptrending market, or would you always want to try to follow the overall pattern, which in this case right now is bullish?
He would always counsel that you want to time your trades. I remember back then, obviously, we all know that ETFs and indexes were not available to trade at that time. But he would always trade individual stocks, and he'd always trade a basket typically. And he would always time his positions, his entry into a long position or short position, to coincide with when he thought an important move was coming in the broad market. Okay. So he was looking for the stocks that would move the furthest, the fastest when the market was ready to move. And he did not want to be in positions where they were going to just, he'd commit capital and the trade would just sit there and gestate, and just bounce around for months and months and months, and the capital would just not be productive. So he always wanted his capital to be working the hardest, the soonest. And so this is a big part of the method. And so here, the same cycle that we see, we just saw, this time we see that there's a little bit more detail here. And we're going to talk briefly here about accumulation and about, you can see that once the markup begins, that there's these periods in the markup, which are called reaccumulations. And these are very interesting to me. And I spend a lot of time focused on the principles of reaccumulation and then also finding them and then defining when to trade them. I'll show you an example or two. And then at the end, you stop the uptrend, distribution begins, and distribution results in a markdown. So what is it that's causing these price cycles? Well, here, again, we're even going in a little deeper, and this is an accumulation. There's a few different structures that we primarily work with. And what we're focused on are the principles behind what drives prices. And then what that allows us to do is to be able to see a number of different price characteristics in an accumulation and still be able to discern the proper time and place to trade, position, etc., for an important move. And so you can see here that here in this case, accumulation begins with the end of a markdown, which is a selling climax. Stock has to be in weak hands for a markdown to occur. For a big bear market to occur in a stock or an index, stock has got to be in the wrong hands. It has to be in weak hands, as they would say. What is it that causes the stock price to stop declining and go into a trading range structure and be able to find support, and then ultimately which leads into a reversal into an uptrend? Well, there has to be something going on here that's causing this to happen. And in this case, you have a stopping action at the selling climax, which is this big, wide bars, huge volatility, gigantic volume. And this is the stopping action of the decline. Now, the stopping action, and what begins the stopping action is partly the selling climax, but more importantly, or as importantly, is the automatic rally. And the automatic rally is a big counter trend move that is much greater than the moves that preceded it in the downtrend, which shows that there are large, powerful, informed interests that had decided to begin accumulating shares at this level and providing support to the market. And so you have this big advance that can, and I have examples in the blog, and some of these advances can be just 20, 30, 40%. They're huge, they can be huge. And then, but they're short-lived. And so after the automatic rally, you have a series of testing. So once you have that first secondary test, you have phase A. And phase A, by definition, is the stopping of a decline. Now, the thing about phases is that each one of these phases represents a different characteristic of price and volume behavior. Price and volume will act differently in phase B than it will in C, than it will in D, and than it will in E. And this makes perfect sense, because what's going on is that there's accumulation taking place. There is absorption of shares by strong hands. And so the absorption of shares by strong hands is effectively removing shares from the marketplace. It's creating a scarcity of supply of shares to buy. And when there's a scarcity of shares to buy, eventually those shares will begin to tip towards a bullish trend, because there are very few shares and there's still a lot of demand for those shares. So ironically, you can have these explode all of a sudden at the end of phase C. This is the final testing area before you begin the markup. So C is the testing. B is where stock is being systematically accumulated by the composite operator. C is where the final testing takes place. And I'll show you some real life examples. So we'll move on from this. And then D is the markup that takes you up and out of the accumulation area, where you have a backup. And I've heard the term used here many times, cup and handle. Mm-hmm. So this is like the handle. So this is just good principles. And then after that, you begin the markup. And the markup can go on and on and on and on. And then we have sort of a secret tool that is available to us, which is the ability to do horizontal point and figure counting, where we can take it and make a point and figure chart. And stock charts has a tremendously good point and figure engine for making charts. And we can make these charts and we can count them. And we can, from this, we can estimate the potential upside move potential of the accumulation area. It's an estimating tool, but it's remarkably good. So anyway, it's just enough as this is what I'll say about accumulation at this point. But each one of these areas, and I'll show you some brief examples as we move forward, but every one of these areas, these phases, have unique price and volume attributes to them that once we develop an eye for them, we're starting to achieve the path of mastery in Wyckoff chart reading. So anyway, here, comments, questions before we move on.
Well, one thing I just wanted to kind of point out, I know on your last slide that you had, Bruce, you were talking about reaccumulation phase and a redistribution phase.
Yes.
And to me, and we talked about this before the show, it's very similar. You know, we talk a lot on here about different types of continuation patterns, like in an uptrend, when we go through into a consolidation, it's a continuation, could be a continuation pattern, like an inverse head and shoulders, or a cup with handle that you mentioned, or, you know, a triangle. But those types of patterns that we talk about on the show all the time under Wyckoff is simply one of these reaccumulation phases during an uptrend, correct?
Correct. Absolutely right.
Okay,
and
so it's terminology is what we're talking about.
Terminology, but I hope that what we can do here is that we can create a little bit of nuance through maybe the phase analysis idea, or through being able to discern sort of the changes in price behavior as we move through a reaccumulation structure, however we want to describe it, and that it can help us to improve not only, well, first of all, we'll be able to learn how to count the point and figure count for that. And then the second part is that it can help us to improve maybe our entry strategies and help define our stop strategies. And so if anything, maybe it just sharpens our tools a little bit. But this is exactly right. And this is just best practices. And whether or not you use a different method of sort of pattern analysis, or use the Wyckoff method, or you combine the two, I think that they're completely complementary. Completely.
Okay.
All right, so here we go. So these are just, now this was from a blog I did in July 1st, 2015. So you can go back into the archive and you can find these schematics and you can read up a summary of this. So basically we see here there's two flavors of accumulation that we kind of emphasize, and that is, the first one is where we have a spring, they call it, and a spring, its final action in phase C is to clear out the lows of the accumulation area and create a false breakdown. And so there's kind of three types of springs that we talk about. But the important thing is that the spring is the action that once it's concluded and tested, typically a spring will be tested, is that you begin an important rally up and out in phase C, turns to phase D, and you're beginning an uptrend. And this is sort of the cathartic event that ends the accumulation.
So you would be looking for high volume there?
Yes, typically yes, but there's a type of a spring that comes on really low volume, where it goes down and marginally breaks out the key prior lows, and it does it on very low volume. And that spring is a very powerful buy signal, and maybe is the best spring of all, because it shows that the composite operator, that they've exhausted all of the supply. The CO is always asking the question all the way through here, have I absorbed as much supply as there is available? The CO is very patient. They'll take months and months and months to build up their positions. They will not work against themselves and drive the price of the stock out of the range until they've done all the accumulation that they intend to do. And so once they feel like all the supply has been removed and it's in strong hands, only then will they then focus on the uptrend. So a spring that comes on very low volume is a very bullish event. And so you can buy, and it's called a number 3 spring, but you can buy that spring right away. Most springs come on volume. And so volume demonstrates that supply is still present. So you would expect to have a rally back up in above these prior lows, which occurs here, and then a test. And the test comes on low volume. And then the test is the evidence that supply has been pretty much absorbed.
When you're looking at these springs, Bruce, and you're trying to minimize risk, because we always talk about reward to risk here. So if you see something like this where you're breaking down off of a downtrend after we've seen some consolidation and you believe this to be a spring, I'm assuming you're waiting until you make a certain move back up into the zone before you would accumulate?
I think that's an excellent strategy, and that would be the strategy I would use. And so, for instance, if you get a good bullish bar right here off this turn, big wide ranging bar, and volume comes in on the up bar, that would be encouraging to me. And then you put your stop right below the spring low, and then the other place would be on the turn off the test, and then put a stop below the spring low. So those would be excellent places. And then there's a number of places to get busy accumulating and building a position on the way up in this phase C, phase D period. And
we had a good question here, I think, real quick, Bruce. And that was, what role do earnings and revenue play within this? I mean, do you consider, upcoming earnings and that sort of thing?
I think earnings are always important. And now it somewhat depends on the time frame, because these principles work whether you're looking at 15-minute charts or you're looking at weekly charts or monthly charts. But these principles are at work. But I would say in the case of the longer time horizon, say weekly, that that you're seeing a situation where maybe business conditions for this company or for the market or for the sector have been very bad, and oops, sorry. Let's go back up. Yeah. So where conditions are turning. Now, typically what happens is when you're turning the ship, the corporate ship, and business is getting better, usually business starts to show the evidence that it's improving once the uptrend is in force, somewhere up here. So all this action is discounting. Composite operator knows that business conditions are going to improve, and they're doing all their accumulation under the cover of bad news. So there's a lot of pessimism that takes place in the course of a base being built, accumulation occurring, and they use that bad news to be able to shake out weaker holders from their stock. That's a classic playbook. So that's what happens in the longer time horizon. I think when you get into the shorter time horizons, intraday charts, maybe daily activity, earnings are probably more important in terms of the upcoming earnings report. So when you have earnings coming in the course of the next days to weeks, that the market will often start to act ahead of those earnings in anticipation of either a good report coming or maybe a disappointing report coming. And this work can really help with that. And I like to trade earnings, but I would prefer to trade earnings 4 to 6 weeks ahead of the earnings coming out. Because the market will tend to discount.
Yeah, I think too, depending on what type of trader you are. I mean, if you're looking at the hourly charts and you consider yourself more of a day trader or, very, very short-term trader, those types of events can be powerful in both directions.
Yes.
I think if you're looking at the weekly chart, I think a lot of the earnings reports kind of gets buried in the longer term, weekly bars or candles or whatever. And you don't see nearly the impact over a longer period of time for those who like to buy and hold. At least that would be my assumption. Would you agree with that?
Completely. And so obviously people want to be careful around the actual reporting of earnings, but a lot of times earnings, and Tom, I know you talk about this, as after the earnings have been reported, that you have a response, say a gap move, which is a gap up. That's good news, so there's an opportunity. See, the gap up could be, say, right here.
Mm-hmm.
And so you get a good earnings report, and then you consolidate. Well, notice the change in character right here. We do a lot of this work on change of character, is that you have a sign of strength, which takes you out of the accumulation range. And then instead of coming back in with a corrective action that comes back into the middle, which is not uncommon, it goes sideways. Well, this is remarkably bullish. And so even if you've never traded this stock from here all the way up to here, this is remarkably good news. And so you might have a gap up and then a consolidation before the actual uptrend begins. And so that would be that'd be a terrific place to begin to campaign a stock.
Mm-hmm.
So an example. So this is out of an old blog. This is 09. This is Chipotle. And so this is just, here's what we call preliminary support. We use these terms, but don't be frightened by them. Preliminary support, selling climax, automatic rally, spring, sign of strength. These are just ways to describe what we think is happening to price and to volume. And so you can see here, huge volume on a gap down into preliminary support. Typically, we look for volume to come in on the selling climax. Oftentimes, it comes in on the preliminary support. And then after that, the prices continue to grind their way down. But this is even though this is very high volume, relatively speaking, it's much lower than here or here. And so this is your idea, Tom, about volume off the peak. So when you get volume off the peak, this is big trouble. And so as the markdown occurs, volume is diminishing, and then finally you have these volume spikes, which are climactic in nature. And so you have a selling climax. And so these are the first two things we do when in our chart analysis. When we get a selling climax and an automatic rally, is we draw a support and we draw resistance, and we draw it at these 2 points. And then after that, we have the accumulation process taking place. And this in 09 was a shakeout low, very deep low in the S&P 500. Look how high Chipotle is off of that shakeout low. Shakeout low's down here. So homework assignment for everybody is to take Chipotle back in 09 and compare the price to the S&P 500. Mm-hmm. And then this is the part we really care about. This is what Wyckoff was counseling us to do. And that is identify, this is called a last point of support. This is the last place support is made before the uptrend begins. That's all that means. And so look at the nature of this rally, up and out. This is what Mr. Wyckoff was counseling us to develop our skills to do. Trade these. And so even if you're an option trader and you want to identify the best junctures to be trading options, this methodology is excellent for that.
I have a question for you, Bruce.
Mm-hmm.
And that is, when we were talking about the redistribution phase, when you're in a downtrend, you kind of go sideways in a continuation pattern for a while before you break to another leg to the downside. What's the distinguishing difference between a redistribution phase where you're simply going sideways before another move lower, and this accumulation phase where you're getting ready to break out to the upside. I mean, when you're looking at the two of them, is the difference simply which way it ends up breaking out?
That's a really good question. And what logic would tell us is that there has to be, so even though there's like the 5 phases of distribution in taking place and redistribution, that there must be something different going on in the price and volume structure and distribution because the CO is systematically liquidating all their shares. And so something different must be going on in distribution than in accumulation. And we should be able to see it in the stock price action. So I am going to, being the technological regressive that I am, I'm going to go down here and look, Ma, no hands. Okay, so here is a blog that I did, and here's the date, October 2nd, 2015. And I actually did one before this, and there's a link to it where I said, oh, biotechs are under distribution. And before the big breakdown occurred. But this is the big primary difference is that you start to see a slowing of the upward momentum. You get a buying climax, and then you get an automatic reaction. So you draw resistance and you draw support. And then the expectation is that you start to lose momentum, and then the volatility comes in on the downside, which shows that the composite operator is liquidating their shares. And so volatility must come in on the decline. So all of this rally all the way up to here has the CO systematically selling the shares that they can without causing IBB to drop. And so you can see that it's going up, but the quality of the rally, this rally, is not as vibrant as, say, the quality of this rally or the quality of this rally. Now, this isn't necessarily a reason to sell, but when you get, and this is called an upthrust after distribution. So you want to be on your toes after you take out a buying climax with an upthrust action. And as long as that upthrust continues to remain above and keeps working higher, hey, we're in good shape. But if we start to break, volume comes in on the break, volume is high, volatility is high, and then you get a rally of poor quality that follows that. One of the ways we know that we're in trouble is we look down here and we can see the volume drying up on the rally. We can see that there's the demand for IBB is minimal, and the demand is of low quality. So that tells us that the CO is actively selling shares. So here, compare this period to this period. This one is even worse. And so look at how poor the quality is of this, and it's under resistance. So this would be, so for short sellers, these would be places to be looking to put on some kind of a partial position. So you put a position on here, you put your stop above the test. You put a position on here, you put your stop above the UTAG. And so, and then here you can see big break. This is a major sign of weakness. So the thing that I would say, Tom, is that when you start to get a break in distribution, is that you see important support areas being taken out. And so there's a sagging or a weakness to the market or to the stock, and the rallies are of poor quality. And that you typically won't see that in reaccumulations. So, these are all things we know, right?
Mm-hmm.
You know, it's just maybe a slightly different way to demonstrate them. So, as a contrast, let's do here. So here's Amazon 2014, 2015. This is a reaccumulation. So here we have a buying climax, pretty deep automatic reaction. This is a reaccumulation because this is occurring after an uptrend. And so then we have an uptrend, and then we go into a long reaccumulation period. This is a year, over a year. And so we see that at the automatic reaction, there's an attempt to rally, but lower highs here, each of these highs is lower. And so then you come down and something happens that's important. First of all, here's a spring. This is a number 2 spring because look at how big the volume is here, Tom. We were talking about this earlier. Huge volume here. So now, and then look at the bar that occurs after the spring. Really good bullish bar, good volume, not as high as on the spring. But when volume comes in on the low bar, then we automatically ask, is this accumulation? Is this strong buying that is coming in at support? And then sure enough, look at this rally. And this rally is really actually very good. Even though it doesn't get up to here, it goes up very quickly. Now it comes back down for another bigger test. But then if we're at all uncertain about what's going on, look at the volume that comes in on the turn. So smaller, tighter little bar here. Volume is lower on these 3 down bars than occurred on the spring. And then look at the turn.
And the other thing, too, that I think is interesting, and before I even get into that, I have to tell you that I'm not going to lie. When I saw you using candlesticks, it was pretty exciting because I love candlesticks.
I love them, too. And I have to take all your candlestick classes.
There you go.
Yeah, because it's like there's so much I don't know about traditional candlesticks, but the charts are just so beautiful.
Hey, Bruce, we've had some people, asking to look at some recent examples, and I know we're getting ready to go in the 10 and 10. Maybe you could watch some of these 10 and 10, and if you see something that maybe sticks out to you as far as
love to
chart setups.
And I know that I'm sort of out of time here.
Oh, no. We're going to have you back after 10 and 10. Trust me.
Oh, okay. Okay.
Yeah, if you can hang with us, Bruce, we'd love to have you back in for a little bit.
I'm here for the duration.
Okay. The other thing
you're stuck with me.
Awesome.
That's a good thing. The other thing I would mention too on this chart, Bruce, of Amazon, is that from a technical perspective, when I look at this, where you've got the JAC arrow and that little breakout, looks like maybe in February of 2016 or so.
Yeah,
that to me looks like a breakout of a bullish wedge, which is another kind of way of looking at it. But when you've got those lower highs and slightly lower lows, or maybe even equal lows, you kind of get a little bit of a continuation pattern. The wedge and that breakout, I think, also would confirm it too. So they really do. What you teach and what you talk about with Wyckoff really does kind of go hand in hand with a lot of the
best practices.
Exactly.
Yeah.
Exactly.
And Wyckoff had a wonderfully colorful language that was of the era. He would call that a pivot or a hinge.
Mm-hmm.
And so, which I think are just wonderful terms. And so you have the hinge here where you pivot out and start to commit. And then the last thing I'll say here, because I know we want to get going with this other stuff, is look at how we were talking about the backing up action and the change of character. Look at what happens after this little sign of strength, which takes out these peaks, and then look at the inability to go back down again.
Mm-hmm.
And so see, all of these declines all have an ability, an ease of decline where they're able to go down. No longer. And so you see this trading action, you go, this is bullish. And then sure enough, you're up, you're out. You have another backing up action that is back up to the edge of the creek, we would call it, but it doesn't matter what you call it. It's just look at how it just resists going down. That's very bullish, very bullish.
Excellent.
No doubt about it. All right. Well, I'll tell you what, while we go through the 10 and 10, and I know Aaron's going to give a quick market update probably, and then we'll have you back in. But maybe during that time, because we did throw a lot of questions at you, maybe you can go back through and see if there were any other key points that you wanted to establish before the show ends today.
Okay. Thank you.
Yeah.
And as I go through these 10 and 10, as Aaron mentioned, if you see any that really catch your eye from a Wyckoff standpoint, let us know.
Yeah. Interrupt.
We'll do.
I'm sure Tom would love that. Okay.
Great.
Excellent. All right. So we promised everybody we'd start off with BOTZ, BOTZ.
All right, so let me pull up bots. All right. Well, first I have to say, no pun intended, but it looks a little overbought to me. Sorry, I couldn't resist.
You even got Bruce to laugh. All right.
Yeah. Well, there's a lot of volume going into the stock, or actually, it's an ETF. This is an AI thematic ETF. So certainly, there's a lot of. I'm not familiar with the ETF and what it holds and so forth, but there is definitely a lot of interest in this area of the market. You can see that really with the volume that's been coming in. A lot more folks are trading it. But from a 10 and 10 annotation standpoint, I mean, the only thing really here that bothers me, if there's anything that bothers me, is the fact that we do have a negative divergence, which is just a sign of potential slowing momentum. And I say potential because one of the things that Bruce mentioned, and I certainly subscribe to this theory, there's really nothing more important than the combination of price and volume. So if you're getting a breakout and the MACD is showing that there's a little bit of slowing price momentum, I tend to look to see if there's still a lot of interest in the stock in terms of volume on these moves. And I think you can see with bots that as we've continued going higher, we had a negative divergence back here, by the way, at the beginning of October when you break out. And a lot of times you see that in stocks that are in mature uptrends. You'll see a negative divergence when you first get a fresh breakout. And so I think it's way early and premature to immediately start writing a stock off just because it shows it flashes a negative divergence for a short period of time. As you can see, once we made this breakout and had the negative divergence, it wasn't long thereafter the uptrend continued and that negative divergence was gone. So you want to be careful not to be too early to that party. The other thing I would notice is that as we've been moving up, that rising 20-day moving average continues to perform as excellent support. So I would continue to watch that.
All right, very good.
The only comment I have is that we have a this is a daily chart.
Yes.
Yeah. Okay. So we have a break on high volume that could be potentially construed on a very short term basis as a climax. Look at that little gap as it runs up into the climax. That last run up, and then you have a decline on volume, pretty wide ranging red bars. And so I would go in, say maybe on a 60-minute chart, if I was looking at this, and I would draw resistance and support, and I would label the top tentatively buying climax and below it automatic reaction. And that I wouldn't be too disturbed by that. It's just that it could be that this is the beginning of a range-bound market. Reaccumulations start with a buying climax and an automatic reaction, and then they consolidate for a period of time, and then they go up again. And so I would just be on my toes for this being becoming range-bound. I certainly wouldn't conclude that there's any necessarily distribution going on, but there were some large interests that were selling off of that little climactic peak on those red days.
Now, would you then put a stop in below that recent low, or is it possible that you come down a little bit below that low and then get one of those spring type moves to the upside?
Yeah, there's kind of two. If it's distribution, then I would expect that we could probably look at this chart 6-8 weeks from now, and it will still be in distribution. And that it might be still bouncing around this range of, say, 24 down to 23, 22, something like that. And so I wouldn't be in a big hurry to conclude that this is distributional yet. I would be thinking in terms of, is there a spring developing or a hinge, a pivot, where we could trade this tremendously good momentum for another move. And that may be a couple weeks away.
Okay, cool.
Yeah.
All right. So let's see. Our next one will be AMLP.
All right. Alerian MLP ETF, another ETF. We're getting a lot of ETF questions. Well, for me at this point, I think we're seeing a consistent downtrend. So I'm not going to be a fan until we break the downtrend. So I would just say if I was annotating this and wanted to kind of keep track of it, I'm going to be watching this trend line very closely. And it really, to me, looks a lot like a channel where you've got, you can draw a line, and a channel, a parallel channel, which is what I really focus on, is where you've got the same slope for your highs as you do for your lows. And you can see this one is really bound by this channel for now. So there's really nothing that I would like about this chart technically until we got a breakout above this upper downtrend channel line.
I would only add to that to look at the volume on the declines. So you can just look at the volume all by itself, and you can see these big red spikes of volume, and as it's going down. And so that needs to dissipate. Supply continuing to show up, decline after decline after decline, just shows that there's supply present. And so you want to see the supply drying up, which shows that there's some attempt at accumulation, and I'm not seeing that yet. As a matter of fact, that last little rally that we had that we're in right now, look at the volume diminishing as it goes up.
Mm-hmm.
Yep.
All right. The next one we have is CPG.
All right, CPG, Crescent Point Energy. Of course, we have seen some pretty nice action. This one will be interesting to get Bruce's comments on. But what I'm seeing is a possible bottoming reverse head and shoulders. So I will annotate this. And right here, you can see a pretty strong neckline. This was prior support that we lost back in June. We came back up, tested this level. Looks like it's about 830, 840, something like that. Went back down to a lower low, which prints the head. We come back up into the right side of the neckline, take one more move down to the downside. You can see it almost is perfect symmetrically from the left shoulder to the right shoulder. And now we've got three white soldiers coming up right to resistance. Look at the volume picking up on this move. That's a bullish engulfing candle at the bottom. We don't have the breakout yet. So if I wasn't in, I think this is the wrong time to get in. I would want to see this breakout, but a heavy volume push through about 940 or so, 930, 940, I think would be very bullish on this chart.
This is a very attractive chart. Sorry, I didn't mean to interrupt.
No, go ahead.
Just point out some things that stand out to me, because I think Tom's analysis was spot on. Is my little here. You can see that look at the volume come in at the resistance area around like 9.25. So, or late July, look at the volume come in right there. That shows you, and then look what follows. So that shows you that supply is present around that area. So it's not a surprise that when we get into late September and we rally back up again, that we get back to that level, and then supply comes back in and we have a big decline. And there is also some volume coming in, but it tends to be more towards the bottom of the move, which I think is bullish. Really good volume on that low day that comes at around $7. And then this turn comes on volume. So the other thing that really stands out to me is in late August, look how low the volume is as it pushes down to the low. And that possibly could be construed as sort of like a number 3 spring, where there's no volume on the decline, and then has a really good run up from there. So that's a pretty good rally. And so I would really I'm just echoing what Tom said, which is that here I would either look for it to show a change of character by going sideways at this resistance area and showing no ability to go back down, or else jump out, maybe go up to the moving average and then back up to that the resistance line that Tom drew. And either one of those places could be excellent places to look for a pivot and then take a position.
When you look at something like this, I mean, this is an energy company. How much does it matter to you how that group is performing relative to the S&P 500? Do you want to look for stocks that are bottoming in a group that is beginning to show relative strength?
There's kind of I guess my main answer to that would be I would always look for the relative strength leadership. So let's say, for instance, in energy right now, I like the way energy has been behaving in the last, say, 8 weeks. It's like it's had a good run. It's acting well. Since mid-August. And so this is very constructive to me. And I would tend to start by looking for large cap leadership, because we know that the institutions, and I think of institutions differently than the CO, but a little bit, even though COs are a type of institution, is that the institutions will always go to big cap quality first. And so, for instance, Chevron is leadership right here. But then after you sort of initiate with the large cap leadership, is then you go look for the say the Crescents out there that look like they want to develop leadership. But you can see here, look at how Chevron has just a classic accumulation structure.
Mm-hmm.
And then look at that beautiful rally in late July, up and out, and then it backs up to where old resistance becomes support. And that becomes just an excellent place to look to put a position on if you didn't get in around the support areas. And my tendency is to try to average up a winning position, so I'm never trying to bottom pick.
Mm-hmm. Yeah, this one definitely, as you can see, this is what you're referring to off this downtrend. Then it went sideways.
Yeah.
And this is what you refer to as your accumulation phase. And now it looks like it seems to be moving into those later phases.
By the way, Chipotle, that earlier example we looked at, the sort of a homework assignment, notice how Chipotle back in 2009 was like much stronger. It was making an accumulation base, but it was much stronger than the S&P while it was doing that. Somewhat akin to how Chevron was much stronger than the XLE.
Right. Okay. Aaron, why don't we do two more of these? Because I think this is really instructional, not only from 10 and 10 perspective, but also getting Bruce's take on these stocks. Why don't we do two more of these, and we'll the 10 and 10s on Friday.
Yeah. Well, I was going to skip the market update. We're getting a lot of really good feedback in the room about Bruce's comments on the 10 and 10. So I figured we'd just continue it for a bit longer. So yeah.
All right, let's do it.
All right. Ford, F.
Okay, Ford. Well, first of all, relative to what I've been seeing in other areas, I don't think Ford is one of the relative leaders, but I do like the way it's been performing over the past few months. So the big thing for me on Ford is just that it needs to negotiate this resistance level where it has been for many months. And it does look like, and I guess you could draw this a couple of different places, it does look like it's trying to make this breakout today. So additional volume later in the day to support this breakout, I think would be very good news. Also, off of this uptrend, this looks to me like a maybe a triangle, equal highs coming across, rising lows. So you got an ascending triangle, which I'll be interested to hear Bruce's take. But I think this may be accumulation and maybe like a reaccumulation phase before a breakout. But what are you seeing on this one, Bruce?
Well, it's just it is a beautiful beautiful accumulation type structure. It's got a good climactic surge down to the lows back in April, a high volume on the way down. So we want to be, look at that big high volume low in May. And then after that, that sets support. And so the nice thing about support is look at how it can get below support, but can't stay below it. Mm-hmm. And so we get over here to August. Well, there's a classic number 2 spring right there. So it goes down, takes out very important support mid-May, and then does it on an expansion of volume, which makes it a number 2 spring. And then after that very next day, that's a test. You can see it tries to go down, but it can't go down, can't take out the low of the spring day. And then it starts to go up. And I would be looking to just look to buy on those early bullish bars on the way up with the idea, and I wouldn't put a whole position on. Typically, we think in thirds in Wyckoff, so a third of a position, and then look for confirmation with the fact that prices keep going up. And so now you've got this really nice run up. Look what happens when it gets up to the July peak. All it can do is just consolidate in September around the July peak. It can't go back down. That's very bullish. Mm-hmm. And so then you have this nice just march up to this major resistance area. And it is a major, look at back in January, February, March, it's like major resistance. Mm-hmm. And so it gaps up to it on very high volume, which shows that there's supply there. And so we would expect a range-bound market for some period of time. We get an automatic reaction back into the middle of October, and then it just sort of works its way back up, has one more test. Looks to me like a little reaccumulation. And so now that it's out, the only thing that's that I would want to see is I'd like to see volume start to come in as it's pulling away from old resistance, which is new support. But,
now, when you look at like a Ford, and we were talking about relative strength, and then you look at a GM, would you be more inclined to buy a Ford, which is just making a breakout, or would you be more inclined to buy GM on a pullback in a much stronger uptrend, previous uptrend?
I would be probably more inclined to buy the stronger stock.
So look at GM on the selling.
On the selling. So it's like I see this. I see a climactic action and a decline, which looks to me like an automatic reaction. Looks like a range-bound market. So I would look to be able to draw resistance and support. I'd watch how it trades, and I'm sort of figuring that we have maybe a number of weeks of trading range action here that's going to give us an opportunity to one, decide whether or not this is a good reaccumulation, and number two, where to initiate positions if we're not in it yet.
Yeah, I got another. Go ahead.
This is a great looking accumulation, and then the urge that I always have is count a point figure chart. So it's like look at this mid-March spike of volume. So that is an important climax. And so now we can go all the way over here. Look at the point I would make from our earlier comments is look at how the volatility has come out of GM as it's gone further and further through its accumulation. And so this is what we would expect to see in a stock that's being accumulated by strong hands. All the volatility is in the early part of the accumulation structure, and the volatility is coming out of it in the later part of it.
And so this accumulation phase here is essentially taking out a lot of the liquidity in the market, so you don't have as many shares, and therefore you just don't go through a period of heavy selling. Is that
perfect? Yes, exactly. Okay. And that's exactly what causes big markups, is the fact that all the stock is in really strong hands. And so we can't see that. All we can see is the chart action, the price action. We can't see who owns the stock. I mean, later on you could see by looking at filings and so on, but initially you can't see who owns it, whether it's Warren Buffett that owns it or somebody else who's not a CO. But here you can see from the way it's trading that somebody is accumulating shares and has absorbed a number of shares out of the marketplace, making it hard to trade this stock.
Well, the only difference between Warren Buffett accumulating it and me accumulating it would be about 100 million shares.
Exactly. But see, here's the beauty of it, Tom, is that we all have an advantage in that. I mean, we don't have the capital that they're running, but we have the advantage that we can wait until the exact pivotal moment to start committing to the campaign. They have to buy all the way through the accumulation.
That is a great point, because I agree with you 100%. I do think that small traders, where it used to be that, you were kind of behind the eight ball because, didn't have enough information on the internet. The information was really hogged by the analysts and those in the, the higher positions and so forth, and the big money management firms. But now with so much data out there, especially the price data, I mean, this is pretty simple stuff, really. And you've got this at your fingertips every single day, seeing, the stuff that you're pointing out, the accumulation phases, the points where we break out, the candlesticks. I mean, we definitely are it's much easier for us to find a stock that we want to buy and simply just pull the trigger and hit market order. Yeah, they can't do that if you're trying to get 10 million shares of a stock. You can't just hit market order. You do have to accumulate it over a period of time. So very, very good point.
Perfectly said. Exactly so.
All right. I do have one other question. This one I saw in the chat room earlier, and I kind of hesitated. There are a lot of rules that you follow with Wyckoff, and different things that you look for based on prior price movement and so forth. And there was a question in the chat room earlier, is it similar to Elliott Wave? And I think in terms of rules and principles, it's similar, but I don't think it's necessarily similar in terms of the wave action. Do you follow Elliott Wave much, Bruce?
I need rules because otherwise I behave badly.
Well, we all still don't follow our rules, I think, with trading. I know emotions seem to always play a part.
That's why we need the rules, right?
Exactly, to break them.
Hey, one question that just came in, Bruce, is what is a CO?
Composite operator is a very, very astute, knowledgeable, typically an institution that knows exactly what they're buying, why they're buying it. They have prescient knowledge about what the future may hold for a stock. It may seem unfair to us, but this is the way Wall Street's always worked. And might be that they just have good analytics in their shop, but they tend to be very, very good at being able to not only discern a stock or a sector that's ready to begin going up, might just be a valuation metric, but they also are very, very capable at being able to accumulate shares at good prices.
Mm-hmm.
And so it's a combination of all those things. Not almost all COs are institutions, not all institutions are COs. So It's really the way you conduct your actions. And I contend that every one of us in our group today could act as a CO. We're all capable of that.
Okay.
And then let me answer the question about Elliott very briefly, which is I did study Elliott Wave in great detail because Hank, who was my boss, my mentor, my buddy, taught classes on Elliott Wave, and he was a exceptional Elliott Wave person. And Elliott Wave is really tremendously interesting in and of itself. So Hank would teach a class on synthesizing the principles of Wyckoff and Elliott. I do not do that. I think that for me, all of the principles that I need to be able to conduct my trading are in the Wyckoff itself. So I don't use Elliott, but I can understand why people are attracted to it.
Okay, fair enough.
All right.
All right, what do we got, Aaron?
Okay, you want to go for another? We have one of the folks in the chat room was saying that DPZ was a good example to use for Wyckoff. We'll see what you think.
Yeah, this is one of my bad habits, Bruce. I tend to accumulate pizza. Unfortunately, not from a financial perspective.
I was just going to say, it's certainly one of my weaknesses. I don't think that I can adequately evaluate this stock because I'm too emotionally close to it.
You have a conflict of interest.
Sorry.
That's the way I am with Starbucks.
But Tom, I have to tell you, I don't want to waste time here, but I go to Starbucks in the morning to check out the market, and I will sequester myself at Starbucks to write my blog. And I'll sit there and drink coffee and write my blog in Starbucks in an undisclosed location so I can get my work done. And I love to do that. So anyway.
Well, that's what I do every day. You do your blog article once a week. I do mine every morning.
I know you do, and you amaze me. Both of you amaze me at your ability to do that.
Yep, I'm always at Starbucks. So, hey, if the stock price is down, it's not because I'm drinking less latte. I can tell you that much.
Gotcha. I would say this about. Oh no, go ahead, Tom. I want you to go first.
Oh, that's fine. I mean, I just, you see some volume coming in on the first move down here. So I think this is a pretty key support level on this stock, DPZ, down around the 173 area. We've seen more selling and very heavy volume on a couple of other occasions, but we haven't lost the key price support. So I'm okay with it until we get this breakdown. But I think if we get a breakdown, it could be a reversal. This is a stock that's done extremely well going back the last few years. So I don't know what you're thinking, about this, but I don't like the fact that the volume seems to be drying up as we move up and we're getting heavy volume on the way down. The last thing that remains to me really is this price support.
Agree. And I would just say that I don't like the amount of volatility that's in the stock after the break in July. So this big break in July is worrisome to me because it came on a lot of volume. So there's that volume off the peak.
Mm-hmm.
And then you have expanding volatility as we go from July to October. We've had a really good run up from August to the middle of October, but it came on not great volume, and and then the response to that was volume off the peak and a run right back down to the lows again. So I wouldn't necessarily be bearish on this, but I'd want to see some evidence of accumulation and absorption of shares before I would start to look to campaign.
Okay.
Interesting.
Yeah. Would you say, I mean, because I think probably we're going to have to get, moving on here because we're going to wrap up the show in about 10 minutes. But would you say that when you look from a Wyckoff perspective that the volume, it's obviously you want to see whether the stocks are going up or down, but the volume, it seems like really paints a picture of accumulation versus distribution. And so when you see would you say that when you see these kinds of big moves to the downside with heavy volume, that it truly is a sign that there's a lot of folks moving out, potentially some of your stronger hands are moving out during a distribution phase, and therefore you really need to pay attention to these support levels?
That's exactly the conclusion I would draw, is that when you see big declining bars, expanding volatility, you went from no volatility to huge volatility and on large volume, probably was related to earnings.
Mm-hmm.
And then from then on, you can see that this thing is just trading differently than it was before. And so the run from August to October was heartening. And it was a pretty good move, but we have to be on our toes here because look what happens after that. It shows that there's just a lot of latent supply in the stock.
Mm-hmm.
And so all we want to do is be careful. I'm not saying that it's a cause to be bearish. A lot of damage has already been done, but I'd want to see signs of accumulation, which we talked about earlier before I would, be willing to commit large to it.
Yeah, and this move up that you talked about from late August through the first couple weeks of October here, it was a nice move, but really what it ended up doing was just simply filling this gap from this gap down. We talk about gaps and gap fills and so forth. And so a gap fill, for those of you who are unfamiliar with gaps, is simply going back to the prior open before we got this gap down and this movement to the downside. So we filled that gap, and as soon as we did, the volume comes back in again and we start selling off down toward the bottom of the range. So it's not looking very good to me, but I do think that, an uptrend consists of higher highs and higher lows. And so far we are still holding on to this, what I consider to be a key support low down around 173. If we lost that, especially with volume picking up, that would tell me that we're kind of turning into that next phase, moving lower. That would be my take on the chart.
Yeah, we did have somebody mention a possible head and shoulders. I mean, I could. What I would say is that it might have been, but it didn't execute. But now you could probably make a case for sort of a complex right shoulder. But that August top and bottom down, to me, would have been your right shoulder.
Yeah. Well, I tend to when I look at necklines, I like to see a slightly lower neckline rather than a higher neckline. So if I was looking at this as a left shoulder and a neckline here, the fact that this is a little bit higher, I like to see the penetration go down a little bit below just to show a little bit more selling to kind of establish either an equal low or maybe a slightly lower low, which we didn't get here. But some, and there are a lot that differ, might look at this side right here as being the neckline. And so here was the neckline. And I think you may have been pointing this one out, Aaron, is maybe that was the right side of the line. And then this is the shoulder, and we came down and we went below, but then we go back up. And my problem with drawing it here is that what we did here, where we execute what could be a head and shoulder neckline below it, that neckline, never takes out this price support. So in an uptrending stock, you've got these rising lows and rising highs, and yet we're showing a breakdown that doesn't take out what I consider to be key price support. So that's why I always like to look at this left side to make sure that that is cleared to the downside. But I think that any kind of a move at this point, especially on heavy volume down below 173, would be very bearish.
Yeah. All right, cool. We're now at 10:25 Pacific time.
Yeah, well, I tell you what, Bruce, we are definitely going to have to get you back on the show, because I know you had all these prepared slides and we took you right off the slides. I told you we were going to be talking about some current stuff, and we'd get into a lot of interesting discussions, but you probably had no idea that you weren't going to get any more time to talk about some of the basics.
The morning blew by. It was so much fun.
Yeah, it was a lot of fun. And you did, explain some of the basics to those out there who maybe are new to Wyckoff. And it is amazing. I mean, it makes sense. When I look at charts or when I look at the overall market, I always look at it as though it's a jigsaw puzzle. You're just constantly trying to put all these pieces together. I mean, you can always point to one thing on a chart that's bullish, or one thing that's bearish, or one thing about the market that's bullish, or one thing that's bearish. But it's really about trying to put together all these different pieces of a puzzle. And I think what you explained today with Wyckoff is really kind of brings that to life. I mean, you really are looking at all these different moves and trying to determine, is this more of an reaccumulation phase off of an uptrend, or is this a distribution off of an uptrend where you're starting to turn, you're going to turn back down? And I think trying to read through all these moves, as you've demonstrated unbelievably well today, I think is really the key. So, I mean, would you also agree that it's kind of like putting a puzzle together?
Absolutely. And the only thing that I would add to what you just said is that the only thing we're trying to do is just find that like pivotal juncture where we can get into a really good trade right now. And so find that moment where we're going to get that big outsized move that can go and go and go, and be pretty good about getting the timing right. And if we can just do that, we don't have to be perfect on our analysis or anything else, but if we can pretty much get that right, it's going to be, we're going to have some great campaigns.
Absolutely. Well, I would love to have you back. I know Aaron would love to have you back as well. So we're going to make plans, try and get something set up so you can come back and periodically evaluate the market with us. How does that sound?
Wonderful. And when I'm not on, which will be most of the time, I'll be listening.
We'll be sure and send you a shout out now and then.
Yeah, wave to me.
Right.
Exactly.
Sounds good, Bruce. And thanks so much for sticking with us through the end of the show. We really appreciate having you on.
Thank you. Thank you for being easy on me.
You're quite welcome, my friend. Talk to you later.
Okay, so long.
Yeah,
right.
I think your example of the puzzle was actually really great, because I think part of our problem sometimes when we're looking at a lot on a chart is we want to take a piece and make it fit when it really doesn't fit.
Yeah.
You want it to be a certain way. And so you read it a certain way. And if something doesn't quite fit, you try and force it. And that's when you get into trouble.
Yeah, and I think sticking to rules, that was really a good point I thought that Bruce made earlier about just sticking to your rules. And it's difficult sometimes. I think everybody struggles with that. I mean, I've got rules, and if I'm in a position and the stock starts going against me and I'm thinking, well, the volume's light, you're always trying to figure out, like you said, you're trying to put that puzzle piece in that doesn't fit to make your decision to buy that stock in the first place the right decision. And, I took a class once that was based on the psychology of trading. And they said that that's one of the traits of humans, is that you want to be right. And so, and I think everybody can probably agree with that. I mean, everybody, when you take a position, you want to be right. And in the stock market, it can cost you a lot of money if you're wrong. So You got to be willing to make that call when you see things start to break down. And I think as we have more guests on here like Bruce and, show different strategies, I think it'll really help everybody become a little bit better, well-rounded trader. And that's really the goal of what we're trying to do here. So
absolutely.
Again, thanks to Bruce. Do you want to just give everybody a quick update on the market? I mean, just, the major indices.
I know that there was some interest in small caps too. So I want to get there. Let's share this. All right, I'm just going to go to the member page. I want to show you the candlestick, because I think we didn't do candle glance. I'm sorry. And here you go. So interestingly, remember we had new all-time highs set in the Dow. Now we've come way back down, all of the indexes. And look at the NASDAQ. It had gapped up, and now it is down almost as far as it was up earlier this morning. And we're also seeing Russell 2000. It barely was in the positive today, but it has been struggling and moving downward pretty much all morning and into the afternoon, I guess you would say, into lunch. USO is mostly unchanged. Gold is moving upward right now, and of course that's probably because I was bearish on it just recently. And we can see even a possible little flag going on there in the short term, but we'll have to see if that can continue. So that's pretty much the major news. And I did want to show, I'm going to show IJR because I know that's the ETF for the S&P 600. And we're sitting in a zone. It's a trading zone. So even though we're seeing some serious problems, I mean, we're still holding on to this area of support, albeit very barely. The one thing I can see right now on this chart is if I were to draw some trend lines, we have a broadening formation. Typically, those don't end well. So I would be a bit concerned, and you can see over here in the thumbnail, the 5's getting ready to cross below the 20. And of course, the PMO isn't looking so great, but it's not really accelerating. It's just moving slowly downward. And honestly, I like to see that to happen during consolidation because that unwinds the PMO, yet leaves room for it to move upward when you do get that reversal. And, if we can hold on to support during that lower momentum, then there you go. So that's my quick take on the S&P 600.
Awesome. Well, we are going to be back on Friday. I do want to mention a couple things. Again, first, thanks to Bruce Fraser for stopping by today. We really enjoyed the Wyckoff presentation, the talk. And I thought that 10 and 10, even though it was really 5 and 20, it was really interesting because he gave his take looking at it from a Wyckoff. And I know there were some comments in the room about taking some real life examples and applying it. I thought he did a great job of that. So again, thanks to Bruce.
That was great.
Yeah. And I also want to just reiterate what our president at Stock Charts, Chip Anderson, said earlier at the beginning of the show. If you missed it, we are going to 5 days a week starting on Monday. So no more Monday, Wednesday, Friday. We are now going Monday, Tuesday, Wednesday, Thursday, Friday. Same amount of time. So 12 noon to 1:30 Eastern Standard Time. So you're just going to get more of me and Aaron. I don't know if that's a good thing or a bad thing, but you're going to get more of it.
Well, I think we'll have to bring some more people in too, because, we're getting a lot of requests for guests as well. So, and Bruce certainly is coming back. I know Julius is certainly coming back. Greg, of course, is when he ever gets done with this long vacation. They thought I took a lot of time off for my honeymoon. I don't know. Greg's been gone a while.
Well, and Greg also, I'm not sure if he realizes it, but he's our first go-to. So if you miss a show or I miss a show, everybody's going to get some additional Greg Schnell because he'll be subbing for us from time to time. So we appreciate that. But yeah, and also I guess I should mention on Friday, I'll be doing the reversing candlestick segment. So if you're a fan of candlesticks and you want to learn more, or if you want to just have a refresher, or maybe you have no idea about candlesticks and what they mean, all of you in each of those categories should join the show on Friday. I'll probably spend, 30, 35 minutes going through and showing you the importance of being able to recognize these reversing candles. So be sure to tune in on Friday for that. And I think that's about it. As Chip also mentioned earlier in the show, lower right-hand part of your screen is how do we do. There's a link that you can fill out a one-question survey, very simple. We just want to know what you like about the show, what you don't like. The fact that we're going 5 days now, I guess you can tell us if you're getting too much of us or not enough.
Right.
But no, we'd love to hear from you. We like to get the feedback because that really does impact how we set up the shows going forward. So we love to get your feedback there. I want to thank everybody for joining us today. As a reminder, on Monday, Market Watchers Live is going daily, Monday through Friday from noon to 1:30 p.m. Eastern Standard Time. Everybody have a great afternoon, and we will see everyone back here on Friday. Happy trading.